Yeah. And you may find yourself in a new loan partnership. And you may find yourself behind a brand new dashboard. And you may find yourself with a borrower in front of you. And you may find yourself saying, how do I qualify this deal? You may ask yourself, well, how do I find that training? You may ask yourself, where's that resource again? You may ask yourself, am I even in the right portal? You may ask yourself, this is not the only tool. Same great figure, new lead portal. Click that partner center, log in and learn more. And you may ask yourself, why is this process so smooth? And you may ask yourself, how my borrower funds so soon? And you may tell yourself, this ain't your typical ELOC. And you may laugh to yourself, it's all built in the cloud. You may ask yourself, can I really link my bank account? You may ask yourself, is this what digital lending feels like? You may ask yourself, where do I find that one pager? Right there in the portal in the partner resource center. Same great figure, new lead portal. Click that partner center, log in and learn more. There is training in the dashboard, tools flowing underground, resources and the coding. Click and the answers are found. Letting the days go by, figure makes it easy. Letting the deals roll in, HELOCs made breezy. Into the portal, under the resource tree. Once in a lifetime, the perfect partner, that's figure you see.
Yes. Alex, you there?
Yes, I am there. I'm getting us live now on LinkedIn.
Fantastic. Well, the song says it all, everybody. Log in and learn more. That is what we are all about. We were trying to up our game a little bit in the webinar world. And listen, we have a huge topic we're going to cover today. We have a very special guest with us, Tiffanee Vasquez, who you see on your screen here. So Tiffanee, thank you, for being on the call with us. This will be, by the looks of it, the largest attended webinar in our Figure Sales Success Team webinar series. So thank you all for jumping on. We have more and more people logging on as we speak. Real quick, before we jump in on the topic of the day, which is DSCR, I do want to highlight something that's also changed, somewhat related, but I want to point out to everybody that if you're not aware, about 2 weeks ago, we launched the ability now with our HELOC product that when working with your clients on investment properties for HELOCs, we now allow vesting to be an LLC. It's pretty big news, right, Alex?
That is very big news. And this is something that has been a long time coming. So very traditionally, I've been here with the company since 2020, believe it or not, 6 years now. This has been an ask across the board. More importantly, though, to me, not only do we allow LLC properties, we also have you now enter information on the ownership type ahead of time. So even though maybe your borrower's property isn't in an LLC, this is honestly a win for every ownership type because you're having that conversation with the borrower and now you are entering it here in Lead Portal. So I do want to show this really quickly, Tim, for everyone in attendance. If you are going in to do an inquiry in our Lead Portal system, you are going to find a new option. So you're going to enter in that address as normal, and you are now going to see ownership type as a selection. So we do sole, joint, trust, and LLC now, which is very excited. For trust and LLC, we do request additional documentation, so it might be a little bit of a slower process, but not only are they eligible, but now you can get things out of the way, including if your borrower is held in a trust. This is where you can say up front, hey, make sure to have your certificate of trust ready, right? You can have that conversation, as well as now for borrowers applying directly, maybe you're a partnership type with a referral link. The borrower will put this in initially as well, and they can also select LLC. So very big win for me across the board
Yeah.
of any ownership type.
And Alex, I just want to drive that point home, just so that everyone's clear, and most of you as users, I'm sure already. What's really interesting is that historically that vesting type is a question that the borrower answered, not you, the loan originator, at point of inquiry. Now you, the loan originator, get to answer that question at point of inquiry. So I want to encourage you, when and if and where you have the opportunity, quickly pull a property profile. You have different sources for this. Take a look at the vesting, and now you choose it. It's not been uncommon for borrowers to make the wrong choice. They're not doing anything wrong. It's just homeowners sometimes don't know what they don't know. So that's a huge win. And then, of course, the LLC's vesting type for investment properties is also huge. It's been significant. Been a significant change for us. So to the major topic at hand, we have just launched, and now we're across all of our partnership channels with this. We have launched the ability to do DSCR loans. Now, I want to set the stage and myself set the expectation. Understand, this is not a HELOC. This is either a rate and term or a cash out transaction using DSCR, and certainly for investment properties. So what we're going to do here today is, again, we have Tiffanee with us, which is awesome because she pretty much built this for all of you. And so we're going to go through and show the lead portal and the inquiry as it relates to DSCR. But what we really want to do is make sure we have plenty of time during today's webinar for some Q&A. By the way, Alex, what would you say is the best? Should they put questions in the...
They're going to be putting questions in the Q&A chat. Sorry, Q&A box, I should really say. Folks, I already see some great questions here. Continue to put them. We are going to be doing a lot of Q&A today, so put as much as you can in there. Hopefully we get through all the questions today. If not, we will follow up. As well as I put in our email address in the chat, salessuccess@figure.com. You can always reach us for sales advice strategy. Reach out to us with these kind of questions and more. But with that, Tim, let's dive into it. And folks, if you do have questions, put them in there. We'll get to it.
Absolutely. We'll do all the Q&A as we wrap up the demo of the inquiry for the DSCR, and then we'll jump into questions from there. And Alex, I believe we have other team members on the call as well. And so Lando, Mike, Scott, if you guys can, just keep us honest when we get to Q&A. Make sure we're staying up on that, please. Let's rock and roll.
All righty, folks, I'm going to go ahead and share my screen here. We're going to go ahead and take a look at the desktop view for the lead portal system, right? I'm on my fun little MacBook here. Now, with all of our products, it all lives and breathes in lead portal, and it all lives and breathes in that create new button. So if I have a borrower who's interested, or maybe they just need some money and want to do a little refinance with a cash out, all I have to do is hit this create new button. That's going to get me started on that DSCR inquiry. And that's where the big strength lies, right? Just like our HELOC product, it is an inquiry to see what offers are available, soft credit only, and it does not trigger any leads, which is so important to me. So just like any of our other products, we're going to hit the DSCR, and here we go to enter in their initial information. Very first thing is this is a refinance product. This is a refinance with the option for cash out. So we're going to put in that investment property for refinance. We are then going to need to fill in some additional information. Is the property listed in an LLC? We're going to go ahead and need to know whether or not the property is for sale. We're going to have you put in the estimated property value. And what's important about this is that we are going to require a full appraisal on this. So it's not going to be an upfront AVM for offers. We do an AVM for information when it comes to the property, but we will require a full appraisal, and we'll kind of take a look at the borrower flow later when it comes to final offers. On top of that, we're going to need some things, including monthly rental income. It cannot be a short-term lease. Keep that in mind. This has to be a 12-month, at least minimum lease we are looking at. If they have any HOA information, we'll put that in. And a few other things, including total liquid assets. And we're going to require a minimum of 3 months of liquid assets on this. With the 3 months of liquid assets here, it is very easy. It's even easier than our income verification because they just need to link online accounts. But keep in mind, they can only link online accounts. So when they go to verify assets, they need their online accounts, those username and passwords ready to go. So we'll go ahead and fill that in. Now, with this as well, we're going to put in the borrower's information. If I selected that it was an LLC, would enter in the LLC information along with guarantor information. But I'll keep it really simple for this demonstration. We'll put in the borrower's information with no co-borrowers. So we'll make it quite easy. Now, once we hit continue, we're going to go ahead and move on. We're going to certify permission first off credit pull. We'll confirm it, and then we'll know exactly what offers are available. It's that fast and easy. Should take you a minute or two. Now, on this as well, we're going to need you to verify the actual liens on the property, which includes the mortgage. So in this case, we do have a Bank of America mortgage that we are verifying. If there's anything else to add, you can put this in under other mortgages, other liens, and we'll verify this later, or if the property is free and clear. But keep in mind, we need this to be entered manually, and we're also going to verify that later during the process. So we'll go ahead and submit this over, see what offers are available. Now, with this, here's the offer screen. It's going to show us all offers available to our borrower. Now, with this, again, cash out option. So if they don't want cash out, we can put in $0. Or we can go ahead all the way up to whatever max offer they have. What's really fun about DSCR to me is we go up to $1 million. I really like that. Now, with this, we can kind of play around with it. You know, we can type in different amounts. I'll keep it the way it is. We can see we're refining this Bank of America mortgage. And then there's going to be a broker fee on this. Tim, tell us all about the broker fee.
Yeah, this is completely different from our traditional HELOC, everybody. So this now becomes a borrower paid transaction, not lender paid in regards to compensation. So in the wholesale world, you can go anywhere between 0 and 5%. In our retail partnerships, you can go anywhere between 0 and 4. Keep in mind, the borrower is not going to be able to navigate this screen similar to how they do in our HELOC screen. So whatever you choose here is what is going to be. And if the borrower needs to modify it beyond that, well, then that would end up you running a new inquiry or whatever the case is at that point. But what I want to highlight here is the difference in the broker fee is not what's going to navigate a difference in rate. What's going to drive the difference in rate is going to be the prepayment term and as well the lock length. Okay. So Alex, I don't know if you're able to in the demo bounce back and forth or, you know, show, well, actually it shows the difference in rates right there.
It
Sorry.
does, in fact, which is so nice because you don't even have to play around with it like on the HELOC. It just says, hey, here's the difference between rates.
Yeah. So just know that it goes to a borrower paid compensation, which is all, you know, part of the loan amount and whatnot, in a cash out transaction for sure. And not lender paid compensation like our traditional HELOC.
Now,
I'd like
with
to
this,
call out a couple things.
Oh, go
Sorry,
ahead,
Alex,
Tiff.
if you don't
Tiffany.
mind.
No, absolutely.
Yes. Okay. So a couple things on here. First up, I wanted to make sure that you guys understand that all of these offers are based on the stated information that you input on that initial screen that Alex just showed. The importance of that is garbage in, garbage out. Make sure that information is right so that obviously your offers, your initial offers are pretty similar to your final offers, right? We want the value that you think that it would appraise at. You know, we want to make sure that those liens are entered correctly, the dollar figures are correctly input. Now, also, this is a declining prepayment penalty. And if for whatever reason you get to this page and for some reason you only see a 5-year prepay for 30 days, that's because that's all they qualify for based on the information that you entered for qualification on that ratio. So just keep that in mind. It doesn't mean that the system is broken. It just means that that's what they qualify for based on what you entered on that previous screen.
So Tiffany, if we can, let's just take a quick minute here and dive deeper into the declining prepay term. So let's use the 5 year as an example. Let's make sure everyone understands what that looks like. So in your mind, Tiffany, how is that working as far as the decline based on if they pay it off in 4 years, 3 years, 2 years, whatever the case might be? Oh, you're muted, Tiffany. Sorry.
Sorry. If you have a 5-year prepay, you pay it off in the first year, it's 5%, right, of the original balance. And so on in the fourth year, if you pay it off in the second year, then it's 4-year prepay. And the same with 2-1. So if you have a 1-year prepay, you're going to get charged 1% for that if you pay it off in the first year. Okay. This is a very normal prepayment declining industry standard.
Okay, I was going to say, so industry standard. Okay, great.
Yeah.
Okay, Alex, let's rock and roll.
You know, Tiff, I heard across the grapevine that we closed one of these in 5 days. So
we did. I think there was about 2 or 3 of them now. And you know what I would say to you guys, if you're looking for really fast closings, you know, make sure you have your your documentation ready, and you can upload it on behalf of the borrower, which Alex will go over that as well. But if you have all the documentation needed, operating agreement, homeowners insurance, mortgage statements, all that good stuff that you're usually used to collecting, then you're going to be able to get this closed as soon as possible. The other cool thing that's coming, which is awesome, we're going to start as a promotion. I don't know how long this will last, but we will be paying for these appraisals. So you can't beat that. We're going to pay for that. Nothing out of your pocket, nothing out of the borrower's pocket. That probably starts maybe in a couple weeks. Just, be aware right now, the flow would be you have under 400. And Alex could talk about this, but just giving a little look into it. Under 400,000, you could pick a BPO or a full appraisal at the customer's expense. Over 400 would be an appraisal at the customer's expense. So again, a promotional time, undetermined time, we will be offering figure to pay for those appraisals.
And we're looking for that to happen in the next couple of weeks, we think. And by the way, team, as you can imagine, we'll be shouting that from the rooftops. Maybe, Tiff, by our next webinar, I'll be able to make that announcement. That's 2 weeks from now. So
yes.
No pressure, Tiff, but if you could just go ahead and make that happen.
Folks, I want you to focus on this, right? You get to see offers right away. This can absolutely close in 5 days if you're engaged, if the borrower's engaged, depending on that appraisal, depending on what's going on. But closing a DSCR in 5 business days where we pay for the appraisal, you can't beat that. That is literally the best I physically think we could possibly do. So with this, you're going to have the full loan breakdown. It's going to let you know any other fees, right, that may be applicable, any notary fees, administrator fees, things of that nature, right? So you're going to be able to see all that, how it's rolled into the total loan amount, what the estimated monthly payment is, so on and so forth. The idea here to me, you talk to your borrower, right? This is a pre-qualified offer, to Tiff's point. Make sure they're aware to say, okay, this is what we're looking at. Let's get you started on the application so we can start submitting over those documents for those conditions, start getting you through to that point of appraisal, asset verification to get you through. But with that, that's all there really is to it to get them started.
Yeah. So Alex, I just want to lean in on this real quick. And so many of you have heard me say the same thing regarding our HELOC. Listen, I want this to really be the message. If you have a client that you're thinking DSCR is the product type to fit their needs and what they're looking to get accomplished, I'm going to go out on a limb here and say, I don't know that anywhere in the market you could price out and find out exactly what a DSCR offering would be as fast as you can do it here. So my message is going to be the same across the board. When you have these scenarios, start here. This happens so fast. And if it works for your client and so on and so forth, well, then you're moving forward in lightning speed fashion. So.
We're going to submit this inquiry over. And what it's going to do is it's going to send an email over to our borrower with a link to begin. Borrower is going to say, hey, look at that. I got an email from Alex. Love it. Click on that button. I'm going to get started on an application. You're going to see it in your pipeline. You're going to see it as a DSCR. So you'll maybe see different types now of products depending on what you're doing. And you'll be able to see the status as well as when conditions are needed. Now, what's nice about this is that with these conditions, you can fulfill them ahead of the borrower. So you can start getting stuff done ahead of them before they even get to that page that may even request it for them. And I'll show you what I mean by that. So let's go ahead and hit the action menu. Let's go ahead and take a look at those details and see the DSCR detail page. Now, with this, you're going to get a lot of information in here. Tiff and her team has done a very good job of building this out, in my opinion, because you're going to see everything. So you're going to see the underwriting information, right? FICO score, you're going to see a breakdown. Again, you will see an AVM amount, but again, that is not going to be used for the final underwriting. With this, it is going to give you a breakdown of more when it comes to property information. What I like is it's going to show you things like the appraisal information. So when the borrower goes through and orders the appraisal, you'll be alerted. You'll get information on that order status. You'll be able to see the ratio breakdown of the DSCR and how it shakes out for your information to be transparent. You'll be able to see our new functionality we added, I think late last year, when it comes to notes from our operations team, right? The real people working on these. So you're going to get everything and more, including emails as the borrower's going through. But notice on this one, right? We just did the inquiry, we've submitted things over, and we have conditions. So you can go in and fulfill them before the borrower started the application, or maybe as they're going through the application. It will depend on what we're going to need. So in this case, we'll need the mortgage statement for the Bank of America, mortgage that we're refining. And then in this particular example, this is from a previous demo where I selected it as an LLC. So we would need the EIN. If it's not an LLC, wouldn't need the EIN. So it'll let you know what conditions are needed when. And you can also then track the application status of where your borrower's at. More specifically, not just the timestamps like on the right-hand side with our milestone tracker, but exactly what actions are needed from your borrower, where their current steps are, and what the last activity was. So you know exactly where they're at in the flow, what they need to do to help guide them to have the conversation, and then help them here in Lead Portal. Anything you want to add on at all, Tim?
No, the only thing I was just going to ask Tiffanee to ping or chime in here. I just want to be clear, anything that comes up as conditions, the system is intuitive in the sense that it won't ask you for everything across the board. It'll only ask you what for what is required.
That's correct.
Tiffanee?
That's correct. So in the event it's not an LLC loan, it's not going to ask you for the operating agreement, right? I mean, there are some conditions that are across all, homeowners insurance, lease agreements, et cetera. But yes, the conditions are intuitive to what's going on with the loan.
Fantastic.
Alrighty. Now, hey folks, you want to take a look at the borrower flow? You want to see what the borrower goes through? All right, let's take a look at it. I think a lot of you are saying yes to me virtually.
By the way, is this again, Alex, as you're pulling this up, and thank you. I really, really want to drive the point home. No different than our traditional HELOC process. It is so important for all of us as originators to have the right understanding and expectation of what this system does and doesn't do. And more importantly, set the expectation of the borrower. What is the borrower's experience going to be? So, Alex, you will be able to demonstrate before we end this webinar where we can find resources right within the Lead Portal on these topics. And I just want to encourage everybody, familiarize yourself with the process and the product so that you can set the right expectation of the borrower. So go ahead and let's show that borrower workflow, Alex.
Yeah, just on that point though, right? I do have my resource center here in Lead Portal. I do now have a whole section on DSCR, including a DSCR product guide. So as you get enabled with this product, as you're getting turned on with, depending on your partner, this will be available to you for DSCR as well as, all our other products you may have enabled. All right, we're going to go ahead and get started here. Ignore the text on the screen. Here, very specifically, we're going to get started as a borrower who has received a link from old Alex here, getting them started on the DSCR. So all the borrower has to do is click on their link to begin. That's going to get them started here in this process. So they're going to first make a password. I know, crazy. They'll have that online account. And then when they get started, they're going to agree to the terms and service and privacy policy and electronic communication policy. But this is where the application truly begins. They're going to provide their social in order for us to pull hard credit. We're not going to pull hard credit at this stage. We do it after asset and identity verification, but we're here now asking them for it. And then they're going to get to the offer screen. Now, Tiffanee, I noticed they can't change their offers. Is that true?
That is correct.
And I want you all to focus on that, right? The borrower, unlike our HELOC, is not going to have the ability to modify everything or anything. This is them literally going in here and confirming the offer you have set up for them. So keep that in mind when you have that discussion. Number one, again, it is just a pre-qualified offer, right? But it is very important that they understand when it comes to things like the origination fee that you select, when it comes down to everything else, you are selecting that on the inquiry and then it is locked in. If you were to want to change that, the borrower would have to cancel the whole application and you start the process over. Now, with this, they're going to agree to documentation. I'm going to save you on this, but we'll just say the rate lock agreement and a whole bunch of other docs. They are state specific, so I won't go over them entirely. But this is where the borrower is going to verify their assets. Again, minimum of 3 months. This is where they need to link their online accounts, bank accounts, business bank accounts, asset, retirement. This is going to go through Plaid. So they need those username and passwords ready. Please have a conversation ahead of time. Tell them what they're going to need. Have that, talk to them. Let them know to have those ready. So when they get to there, they have already been set up. They already have it ready. So when they hit connect, all they need to do is select their institution. It's going to have a little pop-up where they're literally logging into their institution. I'm going to do Chase in this example. And they put in their username and password, and voila, going to allow Plaid to do, those transaction histories, account information to verify assets. And
And so,
notice I did not need to verify the full thing. I verified about 25%. I just needed to do 3 months in that example. Now,
yeah,
Tiffany,
so
is it always 3 months of assets that they need to verify?
It is 3 months for a single family home and 6 for a 2 to 4 unit. I know there's a couple questions in the chat around using cash out for reserves. That should be live in production probably within the next 60 days. We're currently working on the tech around that. There will
yeah,
be a
so
caveat that the score will, I think the score will need to be 720 in order to use cash out for reserve.
reserves.
That's a good call out.
Yeah,
And
and so I
yeah, you
just want
guys
to
will get
make
announcements
sure,
on that's gonna be big though.
yeah, and I just want to make sure that as we're referencing the assets here, that is what we're talking about as reserves. And Tiffany, on the reserves, is it on the subject property only or all properties that a borrower owns?
So, great question. It is only on the subject property. However, if you have, let's say you have a borrower that has 3 loans in process at the same time, different properties, obviously, because they have a portfolio of real estate, it's going to be 3 months per property.
If they were doing 3 transactions at the same time.
Correct.
Yeah, that makes sense. Okay. So no matter what, right now today, it's 3 months reserves on the subject property of that said loan. And if I happen to be doing 3 loans at the same time, it would be three months for each of those properties.
All right, now the borrower is going to select their disbursement account where they want the funds to go into. Again, I selected cash out, so this obviously won't appear if they don't want cash out, but here specifically, I linked a Chase account. They can connect another account if they want to. And then I did agree to the auto pay discount, so I'm going to go ahead and select that. And here's the fun bit, right? So this is where that full appraisal is going to come into play. To Tiffany's point, if it is below $400,000, the borrower is then going to have an option for a BPO, drive-by appraisal. We will need an appraisal one way or another. However, notice, hey, we're going to be paying for it soon. I wanted to highlight it on this call, so I kind of doctored this up a little bit. Sorry, Tim. So here specifically, right, it's going to be zero for appraisal. That's going to be crazy to me. Now, if the borrower does a drive-by appraisal, right, we'll go by that. If they do disagree with it, will have the option to basically then request a full appraisal. So, the timing on how long the DSCR is going to take depends on what they select. Really how it goes forward really depends on how engaged the borrower is as well. But to me, borrower gets to this point, if we're paying for the appraisals, I tell all my borrowers, just do the appraisal. It's going to do the full thing. You don't have to pay for anything. But there could be situations where they want to do drive-by, so have the conversation ahead of time.
Yeah, and actually, Tiffany, what just lean on you here a little bit for what we've learned so far. I think you've made the comment in meetings you and I have had that really the full appraisal is typically the path most choose.
Yeah, it is. And, a lot of DSCR loans are, fix and flip, recent renovations. Therefore, a BPO is not internal and they're coming in a little low. So unless you have a really low LTV, it's just better to do the full appraisal. It's faster, it's less paperwork for everybody involved and less headaches and delays.
Makes sense.
Now they're going to go through identity verification. You all know and love this if you've worked with a HELOC before, but they're going to upload a US ID, driver's license, state ID, passport, permanent resident card, whatever it is. And if they're on mobile, like most people, you can take a photo, right? So they'll go ahead and upload that. And then this is the last real part of the application I really wanted to cover here. These are the conditions I was showing, right? This is where the borrower needs to upload documentation, and this can be different depending on the type. So in this case, we have the mortgage statement for that Bank of America. We have property insurance. I have selected this one to be LLC, so we have the operating agreement, and we have a little bit more in here, including the lease agreement. We will need a lease agreement to verify, at least 12 months, all of that. However, again, you can upload these documents in the condition section of Lead Portal ahead of time, getting the borrower, taken care of. They can upload it here. So, they can absolutely upload it at this point as well. In either case, once this documentation is submitted over, it gets sent over to real people, right? This is going to be a specialist review team where it's going to take 48 hours to review. So just keep in mind, this is the part I think most borrowers are going to go through the application pretty quick, hit this point, submit their docs, and then they're just going to have to wait more or less a day or two for our team to process all that and then get them over to those last stages to notary. Also, keep in mind that this also requires that full appraisal to be complete. So it does also depend on how long the appraisal is going to take for once they get over to those last steps as well.
You know, on this page now, I think is as good a time as any to have this conversation. And so, Tiffanee, I'll lean on you again in the sense that different from maybe the HELOC process that so many of our partners are familiar with, we're doing something pretty unique here with DSCR. And Tiffanee, you all have built a dedicated team for this, right? Regarding support both with the borrower and the loan originator. So if you could just talk about that a little bit would be great.
Sure. So we've hired some account managers on the inside here to help you and the borrower get to the finish line. They will keep in contact just like a normal account executive that you might be used to working with. They'll keep in contact with your borrower, CC you on emails, make sure that things are rolling. And, you know, when there's issues, bring them up to you, reach out via phone and or email. And it's been very successful. You know, we have some industry people, some people that have been doing this for a while, no processing, no account management. So it's been awesome.
Yeah, no, that's fantastic. And I think the message there is we're really, really trying to do what we can to create a great experience, provide handholding where necessary. Certainly the sales success team, in particular myself and Scott Karch and Lando on the team, definitely also want to be a resource for this. Alex, you highlighted the Resource Center, which is fantastic. Those will continue to expand, by the way. And the beauty thing is regarding all of our product offerings in the Resource Center, you will notice that any documents that are uploaded in there are also time and date stamped. So one, Alex, thank you for that. It's not an easy task keeping those things up to date. So the opportunity is real. I want to highlight before we go into Q&A real quick that already in the first 10 days, that might even be bumping it a couple days, right, Tiffanee? That we've launched this, we already have a ton of engagement, in particular with some of our wholesale partners. If you happen to be a wholesale partner and you want this activated, you can certainly reach out to salessuccess@figure.com. We have to put a new agreement in place, but it's actually relatively smooth and fast process. We have roughly 27 partners already turned on and activated, and roughly 2 pages of DSCR inquiries already just heading into late last week and early this week so far. So obviously the need is there. So we want to help. And Alex, I think we should probably just open it up to Q&A. Tiffanee, are you ready for this?
Before we
I've
get
been
to Q&A,
responding like a mad woman on the Q&A platform here. So yes.
let's get over to Q&A. Before we get to Q&A, I do want to take over this webinar a little bit with something I didn't tell you about, Tim. Folks, last webinar, we did talk all about democratized prime. Unfortunately, I was not able to join. I do want to push this point further because I really do believe in this. So this is a very easy way for you to earn using real world assets. There is a lot out there. I get a lot of questions every day about what we're doing outside of HELOCs and DSCR and those fun things. So I put some information and a link in the chat. If you're interested in basically finding out more about what we're doing outside all this, feel free. I figure I go ahead and plug it because, again, I'm very passionate about this. Now, with that, I would like to head over to Q&A. So what I'm going to do here for both you and Tiff and Tim, I'm going to start going through some questions here, and we'll more or less just go round robin, whichever one of you want to kind of field these. So we have a question here from Leslie saying, if we enter in LLC under app and close under LLC, is at least one LLC owner going to be the borrower and personally guaranteeing the loan? Does it report to their personal credit once it closes? I think, Tim, you'd probably be best for this.
Well, actually, Tiffanee is probably best to answer it, but I can tell you we will only need one borrower, and that will be can be the guarantor of the LLC. And the quick answer is no, it will not reflect on their credit report. And Tiffanee, keep me honest there.
Yeah. So a couple things. This question was posted when we were talking about HELOC. So there is a difference.
Okay. So there is
that's why I didn't answer it, because I answered a crap ton of these.
So on the HELOC, everybody, keep in mind the LLC is not the borrower. It is simply the vesting on the property. It is still
therefore
the
on a HELOC, it will report the credit.
That's correct.
Okay. Now, For DSCR, regardless of the structure of the loan, we do not report to the credit report.
Hmm.
So that's great, right? But let me just go over the structures really quick for you. We allow the LLC as a borrower, which obviously they would also be the vested owner. The guarantor would be the person that will be signing on behalf of the LLC as managing member or what have you. They need to have at least 25% ownership. If they have 25%, or if there's more than one member, then we would need a resolution. Now, there's a couple really cool things about our tech. As you saw when Alex was inputting the inquiry, we asked information about the LLC. We are going to go ahead and we have a vendor that provides us with the articles as well as a certificate of good standing. So you don't even need to provide those unless, right, you put in the wrong name. So you put Tiffanee's Cupcakes, and it's actually Tiffanee's Cupcakes LLC. We're not going to do a fuzzy match. So we're just going to make you upload those because that causes more confusion around what doc is right. If you put in the right information exactly and the state is supported by our vendor, then we're going to get that articles and we're going to get that certificate of good standing. We will require you to provide the operating agreement. We'll review it. If we need a resolution, we'll let you know. If you know that they're not 100% owner, then we're going to need a resolution and you could foreshadow that and get in front of it. So we allow for LLC borrowers with a personal guarantor. That guarantor is the person they will enter and we will run credit on, and everything will be based on that. Okay. Now we also allow individual borrowers with just a LLC vesting. Again, either way, not going to be reported. We will still need the operating agreement. Anytime there's an LLC involved, we'll still need an operating agreement. I will call out one thing that we are not supporting currently, but we're looking to do by the end of March, which is your partnerships and your limited partnerships and your corporations. So right now it's only LLCs and individuals. So just keep that in mind.
Now, Tiff, what is the max cash out LTV?
I believe it's 75. I'll need to double check, but I'm almost positive it's 75.
I think you're 100% right. But now we have an anonymous attendee asking, besides the amount charged on the broker fee, why would we select 5% over 1%?
It's their compensation. That's you dictating and deciding your compensation. It's borrower paid compensation. So that is, and Tiffanee, I don't know if you have a separate answer, but that's what would be
That's
driving.
exactly right.
Now, here's one that I'm actually curious about, Tiffanee. Aaron's asking this. What marketing material do we have to share for partners? Any flyers, printouts, anything like that for DSCR?
And I know we have some collateral that we could probably share with you, but let's take that away and then Aaron, reach out to the email that Alex put in there, if you can, if you remember, and we'll get back to you on that.
Yeah, we have a marketing toolkit on that resource center, folks. That's for the HELOC currently. I'm talking to our marketing team about basically building out 4 more products. Reach out to us. We can see what we have. I want to start building out more in there. So, Aaron, well, I'm gonna take this full steam ahead this week. All right. Another good question here. What are the guidelines for lease agreements and 1007 rent assessment? 1007. I like the way I said that. Just read something.
Sure. So what we're going to do is we're going to look at the lease agreement and the 1007, and we're going to use the lower. For the most, most of the times, I mean, depending on the market, I don't want to say either way, but sometimes I've had the 1007 coming in higher or I had the lease coming in higher, but we're going to use the lower. If there's a 10% variance between the two, then we'll use the higher, but it's just the 10%, it's just the 10% variance.
Good question, Arisha. I learned something, actually. I did not know that. Aaron's also asking another good question. How are people finding DSCR clients? Would love ideas, basically how to do more of these. What do you think about that, Tim?
Wow, I'll tell you what, one excellent question, Aaron. And I think that's a takeaway for me, myself and the sales success team. And I know the balance of them are on this call as well. Let's start asking that question. Let's start learning where we're at there. Obviously, they're investor type loans, officially business purpose loans, right? So I don't have a direct answer like, hey, they're doing this. I mean, I'm sure there's lead companies and so on and so forth. But outside of that, that's a great question. I think we should continue to do some work at the street level, Alex, and see what we can learn from our partners.
I like that. And folks, I really want to keep building out both in that resource center, but I'm building out our success center, FAQ pages. I'm really trying to build tips and tricks, new videos, getting our team involved. So look out for more in the future. I have a lot planned when it comes to like sales strategies in video form for you all. All right, Stephanie's asking, how do I get login credentials? So this is actually, I think, a really good thing to bring up, Tim. How do our partners get involved with DSCR? How do they get enabled? Who should they be reaching out to? Things of that nature.
One, it needs to tie back into the sales success at figure.com. Stephanie, make that initial request. Just shoot us an email real quick. We can look up and see if you, the partner, the company you work for and or own or run, whatever, if you're currently approved. If you're not as a partner, then we can hook you up with our partnership team and start working on getting you onboarded as a partner. And then at that point, start working on adding, the HELOC, the DSCR, any of the other different features we have. So just shoot us an email and we'll do some homework with you and find out where you are currently and then how we get you logins and up and running.
Now, Annette's asking, how do they set up a Plaid account ahead of time? To be clear, they do not need a Plaid account. So Plaid is a third party that connects to their bank accounts, let's say, or any other online accounts they support. So for example, when I connected that Chase account, I didn't make a Plaid account. I literally logged into my Chase account, connected it to Plaid right there in the user interface. They can make a Plaid account and they can save that for like future connecting. Like I personally have a Plaid account when I do this kind of stuff. I log into the Plaid account, it's already connected to my bank account. It makes it easy, right? They don't have to do it ahead of time. So
Yeah,
they can if they want to, they don't have to at all.
Yeah, don't need to connect a Plaid account. Plaid is a platform that's widely used in the banking system, and it's how monies are exchanged from bank accounts to other institutions and so on and so forth. So most banking institutions are already partnered with Plaid, and it's just the vehicle that they're using to use their bank login credentials to connect the two. That's all.
Now, an anonymous attendee is asking, are we able to get a matrix to confirm the docs needed to help prepare the clients ahead of time? Now, I have my own answer to this, but Tiffany,
Yeah,
what would you say?
I think that's part of the marketing stuff that we could provide to them.
Correct. Also, keep in mind, right, once you complete that inquiry, there will be conditions that'll start appearing almost immediately, so you can start seeing what we're going to need ahead of time. So even then, you can just start, okay, we need this, let's go ahead. Leslie's saying, did you say at least 12 months of lease agreement is required? Yes.
It's a
No
12,
short-term
yeah, it's a
leases.
12-month, yeah, it's a 12-month term. So I
Mhm.
mean, if it's from 3 months ago that, started 3 months ago, that's fine as long as it's a 12-month term. I do want to call out a couple things here.
Yeah.
I'll answer a couple of these questions right off the bat, right? So short-term leases, we're looking at allowing for Airbnb and VRBO. That'll probably be with maybe 2 months or so. Just keep that in mind. The property needs to be occupied. We do not do vacant. I know that's another question that was on here. Yes, you are allowed to do a reconsideration of value. Let's see. So we answered those three questions. And then I think the next one here is, Robert, they don't get mortgage statements, hard money, private money. Yes. Okay. So what we do is first off, I want to explain, we do not do title insurance, right? So your customer's saving a crap ton of money without title insurance. We are doing a title report, right? Prior to final underwriting, because we need to know what liens are out there. So it's a title report. It will bring back liens, mechanics liens, judgments, etc., taxes unpaid, whatnot. Now, if there's no mortgage statement, we will for a payoff. We don't need necessarily a mortgage statement. We're not looking, we're going to condition you for it because we want to validate that the mortgage that we're paying off is attached to the property and the around amount money. But if a note, or we're going to need a contact number to get a payoff. We do not allow you or the borrower to provide a payoff. We must do our own due diligence to get that payoff. Obviously, there's a lot of fraud with DSCR, so we're doing everything we can to combat that, and that's one of the reasons why all assets must be linked through PLAD. So I think I asked Mr. Robert, or answered Mr. Roberts.
Yeah, I think you did. I just want to highlight that here real quick, Tiffanee. So let's just play this out. The conditions there to upload a mortgage statement. The existing borrower has a private money loan. I think you said something very interesting, that even though it's a private money loan, they certainly would have a note. And so you could upload the note in lieu of a mortgage statement in that scenario.
Yep. And then we would, again, need a contact information to reach out to obtain the payoff. Robert, the property needs to be currently leased. So if we order an appraisal and it comes back vacant, there's going to be a 1007, but it'll be vacant and we won't be able to move forward. Mina, so we do a 90-day seasoning. So they must own the property for at least 90 days. And we will use the appraised value.
Next, are you clearing these, Alex, by chance?
I
Yeah,
am
he
clearing
is.
them, in fact, yes.
The questions keep rolling in.
No, yes. Everyone's asking. You're all asking very good questions. Keep posting them in there. Again, if we do not get to all of them in time, don't worry. Our team will follow up with answers. I'm going to be sending out an email with a whole bunch of information on DSCR, as well as I'm going to be uploading a recording to YouTube with the link. So you'll get all that as well. Now,
Art,
oh, sorry, go ahead,
can I
Jeff.
answer this one? I love
Yeah,
this
go ahead.
question.
Yeah.
Art, we aren't verifying rental income receipt. So you don't need to worry about IRS records or transcripts at this time. Starla, we will order all of that. Now, cool thing is we do not need condo questionnaires. We do unwarrantable condos, but we will order everything else.
Can we take a pause there real quick, folks? I've been pushing this really hard the last couple of weeks. We do non-warrantable condos, HELOC, DSCR, non-warrantable condos. Think about that. That is a big market that I'm finding out no one else does, apparently. So I'm helping a lot of partners right now across the board that are really pushing this. We're making marketing material for it. We're pushing this. So just think about it. If you have borrowers in condos, really reach out with our products because it could really help where others can't. Just wanted to say that. Sorry, Tiff.
Yeah, I think I'm going to go a little bit off cuff here on
feel
these
free.
because I think there's some really good things that you guys should know. So we're going to pull soft credit, hard credit, and like HELOC, right? We have our knockouts, for mortgage lates and things like this. We all know that DSCR loans generally, right, don't report to the credit report. So I know a lot of companies out there request like a VOM. We don't request a VOM. So that's something that I think is important for you guys to understand. We also don't necessarily ask for a LOX for large deposits. We might ask for an LOX if we find an inquiry during the soft pull prior to closing to validate that, if it's a mortgage or HELOC inquiry, that it's that it wasn't open. But we're not going to do an LOX for large deposits. We're going to check your PLAD accounts for your assets or for your reserves, whatever you want to call it. And we're going to do a 60-day average. So a couple things, again, the condos, which is, I think, is one of the big, huge things. And right now, I don't think I said this earlier, but we are reducing our FICO down to 660 within the next couple weeks. Right now, you'll see that our guidelines say 680. So there's a lot of cool things that are coming, and just want you guys to understand that this is going to be an evolving product where we're always going to come back and try to make it easier and better for your borrowers and for you, right? So we're looking at some options to eliminate borrower documentation, such as HOA, homeowners insurance, and things like this that we could do on the back end, so you or your borrower don't need to provide them, and it even makes it a little bit faster and less clunky. So always keep an eye out on Tim's updates of product enhancement.
So Clark asks a question about for jumbo DSCR loans where the 1007 rent comparable may not reflect accurate market rent numbers. If there is a lease in place, will that override the number on the 1007? I think you covered that
Yeah,
actually, Tiffanee.
I did cover that. So we're going to go with the lower. But we have a variance of 10%. So if there's a 10% variance, then we'll be okay with that. But if it's a huge amount, we're going to use the lower.
Now, Brady's asking, will the loan officers have a branded link so the clients can apply? Now, some of you are in partnership types where normally with our HELOCs, you would have a branded referral link. Keep in mind for the DSCR, there is no referral link. You will have to do an inquiry, but that's actually good news because you are going to be able to see those pre-qualified offers ahead of time, see if it fits the bill, have a conversation with the borrower before they start. Just know you will have to do that inquiry to get that process rolling. Now, Robert's asking if multiple members are on an LLC, does the majority member need to be the guarantor?
Nope. So what we require is 25% ownership for the guarantor, and there will need to be a resolution from the other members.
Now, Bill Farrell, one of my favorite people, is asking LLP question mark.
Yeah,
What do you
not
think about
yet. Hopefully by right now it's just LLC. So LPs, corps, LPs, whatever, all of that. We're hoping to get that knocked out by the end of March.
By the way, I love that Bill's on these calls. Thank you, Bill. He's such a great partner with us. And little side note, I want to say it was a week or so ago, Bill and team, I want to say closed right at $1 million DSCR loan with us. So awesome. Good stuff.
Bill's doing great.
Yeah, that's awesome.
Scott's asking, we comp all the entire appraisal fee, correct?
Right. Yeah. So right now the customer pays, but in the next 2 weeks or so, we'll be changing over to figure paid appraisals for an undetermined time. Cassandra, no purchases, unfortunately, and no interest only yet. Those things are on the roadmap. I'm not comfortable saying a date because I'm not sure yet, but they'll be coming, just probably not within the next 3 months.
Yeah, there's some, just to add a little bit of why there, team, it's really important to understand that purchase becomes a whole different process for us to navigate when you think of this from a digital perspective and not having a escrow officer or company that's helping disperse and distribute funds and, bringing parties together and so on and so forth. So I'm anxious that we will get there at some point, but it'll be a minute, I would guess.
Do we do these in trusts, revocable or irrevocable?
It will not yet. So that goes along with the corp, LLP, et cetera. So hopefully by the end of March, and it'll be just like HELOC, which I believe is irrevocable.
Now Sandy's asking, I was at the resource center yesterday looking for a marketing flyer for the HELOC, but could not locate. Can you let me know what I'm missing? Sandy, you should see a marketing toolkit in there. However, some of our partners have disabled the marketing toolkit because they want their own internal marketing team to lead marketing. So depends on which partner you're with. Please reach out to us, salessuccess@figure.com, and we can give you more information and guidance on that. Some of them told me they were like, we don't want your marketing toolkit. I said, that makes sense. Okay. All right. Leslie's asking, so the HELOC can be vested and closed in an LLC, but does report to personal credit because the borrower is the borrower? Yes. I get a lot of questions on this, and that was that first question I was bringing up there, Tim. With the HELOC, we can now lend in LLCs, but keep in mind, we are still going to need that guarantor to be the borrower, meaning, and I get a lot of questions on this, that individual is going to put their social in during the application. We're going to pull credit. We're going to look at their information, and it's going to report on the credit. So keep in mind, we can do it in the LLC, right, with the properties held in an LLC, but we're going to still need that guarantor when it comes down to it, and the process is going to remain the same.
And just let me just clarify just a little bit on that. So the reason why a HELOC vested in an LLC is reported to the credit report is because it's a consumer loan. A DSCR is a business purpose loan. Therefore, it is not reported. And another clarity on guarantor. So like on HELOC, your borrowers are individuals. The vesting is an LLC. For terms and industry, right? Like a guarantee is like a whole separate process. So your borrower is responsible for the note in the consumer aspect of this. Therefore, no actual guarantor is needed. There's no guarantee doc being signed on a HELOC loan. On a DSCR loan, when the LLC is the borrower, because that's a business, we're not we need a side guarantee for an individual, right? A guarantor to sign a guarantee doc at closing, and that's who we're running the credit on. We're not running credit on the LLC. Hopefully that clears up a little.
Now, can we do DSCRs in New York or New Jersey yet? Not at this time. And does the broker need to be licensed in the state that they do the DSCR?
There are states that have no licensing requirements. Our system will recognize that and will let you through if you do not have a license in that specific state. And yeah, no to New York or New Jersey. I think it has like some crazy rules that we need to build with like underwriting logic and stuff, if I'm not mistaken. And New York, not yet.
That's a nightmare for New Jersey. Sorry, folks. Robert, I see you're asking about getting set up. Please email us at salessuccess@figure.com. We can get you more information, and take a look to have that conversation. If you're under Figure Wholesale, anyone on this call, if you're under Figure Wholesale, you're interested, we need your leadership for your brokerage to basically do additional paperwork, reach out to us. So salessuccess@figure.com. You can reach out to us, and I'll send an email about all this. All right, another question here. Since these are business purpose loans, do we need to be licensed in the state? We just answered that. So just keep in mind, folks, some states don't, which is kind of nice. Now, someone here, Joel's asking, I want to learn more about your HELOC program, what documents you need, all that. Again, please, salessuccess@figure.com. You can also schedule time with us if you email us. So, Joel, if you want to learn more, reach out to our team. We can get you info, as well as we can sit down with you on a call and have a conversation. Annette saying, Aaron, put your question in ChatGPT and it's going to give you marketing suggestions. Really reach out, I would say. And what we're going to do, like Tim said, as a team, we're going to keep building on like sales advice, seeing what our partners are doing. And I kind of want to build like a playbook when it comes to this at some point. Margaret is saying this program is not available in all states. Correct. That is correct, Margaret. So it is certain states. You'll see that in the documentation, and we are expanding on that over time as states allow us. Another question here: minimum FICO score to qualify for a 75% LTV cash out refi. So,
I don't know off the top of my head. I need to. Yeah, I need to pull up the guide.
Alex, we can get back to some of these folks too. Not that I'm trying to rush you, but we have about 4 minutes and still about 30 questions in the queue, and we're not going to make them all. So it's a great question. Just know they are in the resource center. That matrices are there. So.
I want to call out a couple things. I want to call out a couple things.
Let's wrap this up.
Yeah. First off, someone said condo tel. No, we won't mess with those currently. This rental agreement and there's a lot of questions around the rental agreement, right? Someone asked if there was a 12-month rental and then in the rental agreement, it says it switches to month. We're good with that. So another question is like, is there a reason you would use the lower of the lease versus the 1007 if the lease is verified income with payment history? We do not verify rental deposits. So that's the reason. So that's, we're not looking for any zells or canceled checks. We're not doing any of that. Okay. Florida is capped at 70% LTV for condos.
By the way, earlier question, Sandy asked something. I just want to, I won't read the whole thing, but if you're getting the content is blocked when clicking on DSCR within Lead Portal or the marketing materials for that, it's because it has not been turned on for you yet. Again, please reach out to the salessuccess@figure.com and we'll have that conversation about getting that live for you.
Okay. maybe Robert, 5 to 8 units, maybe that's more commercial docks and things like that. So that needs to get scoped out. DSCR is for broker is available. I think it's in 14 states with another 13 getting added by probably the end of this month. So, we just went to market with that. So we just keep adding phases of releases for those states. So check back for those added states. I-10s, no, unfortunately, we won't allow for I-10s at this time. Layered LLCs, no, that's a great question. So if you have an LLC operating agreement and the members are other LLCs or trusts or such, no nested, layered, whatever you want to call it, we do not allow for that right now. A max DSCR loan right now is $1 million. We'll be moving up to 2 on single family or 1 unit and $2.5 million for 2 to 4, probably by the end of March. Trying to see,
By the way, Joe asked one question I want to take here real quick. How to borrower do an application? How can I be kept in the loop? Joe, in the lead portal now, you will see all notes and all email history between the borrower and or our team. Please, please, please keep an eye on those notes before raising the red flag. If you need some help and viewing that, grab some time again with the sales success team, and we'll help you identify and navigate through that.
Cassandra, your question is interesting. I'm not sure if that was for a HELOC or a DSCR loan. So it sounds to me like it might have been HELOC.
Yeah, especially
maybe you could email out to us.
LLC, and that we won't do. Just to be clear, vesting in an LLC on the HELOC still has to be an investment property. It won't be on a property.
Oh, you know what? I might have said the wrong information on that before. So I didn't realize that, Tim. So I might have said that wrong on a response.
And the system will kick it out on that as well. So same thing. It's very intuitive.
Daniel, the compensation is 0 to 5 on broker. And Cassandra said it was a HELOC.
Yeah.
Wow, lots of great questions.
Lots of great questions, which leads
awesome.
me to this, which leads me to a question. Alex, I believe that as we wrap up this webinar, you will also have in our reporting all of these questions, yes or no?
I will, correct. So this is something, folks, if we did not get to your questions, I'm looking through them now. We'll get to the questions. Again, I'm going to be sending out an email with a bunch of information, answer these questions. I'm going to be uploading this recording today on our YouTube channel. I'll be sending a link to that. Subscribe so you never miss a upload, as well as I'll be looking through these questions to see more information I can put in that DSCR product guide on the Resource Center, see if I can kind of build out maybe a Q&A section. So this has been very helpful for even myself. Thank you all.
Yep. And Tiffany, I'm going to put you on the spot right here, right now. If Alex can get us the list of these questions, do we have a green light to send them over to you to help answer some of these, and then we can get that information back? Of
course.
Yes. Love it.
I think there's 88 have been answered and 22 out there, but yeah, it's probably pretty easy for me to do most of this responses. So all good.
Yep. Fantastic. Listen, team, again, thank you all for attending this. We want the feedback. Understand that, again, the real magic is the process. Log in, learn more. Like the opening song said, get in there, play with it, reach out to the sales success team. If we need to get your partnership approved for DSCR, we have folks ready to go to help you navigate that. So thank you all for attending this webinar. Tiffany, huge round of applause for you. Thank you so much for not only building this, but also showing up and helping us be a great resource for our partners. So thank you, Tiffany.
Anytime.
And with that, Alex, I think we're golden.
All right, we are. Folks, have a great one. We'll be back in another 2 weeks. And with that, have a fantastic day. See ya.